I do think that once we get past the midterm elections, I'm expecting the market to rally in November and December. I think the earnings are strong. I think monetary policy is still pretty easy. Fiscal policy should continue to support this market. And I expect that the market will rally into the year end.
Does the outcome of the elections matter, or is just getting the elections behind and we can move forward knowing which party controls the House and Senate?
I think the importance of the election are where does the legislative agenda go from here and what happens with trade. So my expectations is regardless of the midterm elections outcome, we're likely to see a negotiated deal, kind of outlines of a deal between the U.S. and China by year's end. And I think that'll help give the markets confidence to move higher into next year.
You know, Jack, Mike was highlighting the fact that the markets seem to be really wrestling with the notion that there could be an economic slowdown here, that the evidence from the conference calls may put that question mark there in terms of the earnings growth picture. Is that what you're thinking? I mean, how so far? I mean, we're not through earnings season yet, but we're through the bulk of them. What's your takeaway?
Yeah, I think that two things. One is I do tend to agree with Michael on this, at least short-term move, that history shows that, you know, after the midterms, we do get a pop in November, December. So I do think we have a little bit of tailwind there. But longer term, you're right. I think that it looks like Q2 at that 4.2% is the best we're going to see for a while, where, you know, essentially, I believe beating a 2 or 3% donkey into a 4.2% racehorse, it's just not sustainable. I think the other thing is we're ending this extremely accommodative monetary policy worldwide. And we started, obviously, with the Fed. That is now moving to the ECB. They're not going to be printing money and buying securities after December. And shortly after that, Japan, too. So I think as we move to policy normalization, that's going to create a headwind. So I think that it's probably just part of a natural correction. I don't expect the economy to fall off a cliff. I don't expect the market to fall off a cliff. But I do think that we have to grapple with those headwinds, and, you know, we'll just hunker down and move forward.
Michelle, I want to bring you into the conversation. You heard Michael say, hopefully, that he is optimistic that the outlines of a trade deal with China could come out of the G20 meeting at the end of next month when Xi and Trump sit down. Do you feel that optimistic?
No, I'm pretty skeptical. I mean, we have seen some signs from China that they're willing to give on certain things, like when they talk about reducing the tariffs on cars. That's a good sign. But there's so much about China's business model, you know, their vision of where the country needs to go, that is very involved with things that the administration is very concerned about. Theft of intellectual property,
technology transfer,
state intervention into major enterprises there. And I just don't know that they can undo those things so quickly, mentally, physically, et cetera. So I don't know how you get to a trade deal. I hope he's right. I think it would be good for everyone, for the Chinese included.
Go ahead, jump in.
I think this trade thing is actually step one. I think we're engaged China directly, but then we're going to canvass and try to convince our trading partners to do similar trade tariffs with China to really isolate them, to, you know, essentially, you know, back them into a corner, so to speak. So I think this is unfortunately phase one of a longer term effort.